In today's video, we'll do a detailed review about two most popular Flexicap mutual funds, that is Parag Parikh Flexicap Fund and Pgim India Flexicap Fund. And in the later part of the video, we'll see which fund one should select. So please watch the video till the end. Hello everyone, I am Dhaval and welcome to my channel DIY Finance. After the tsunami in the market by Hindenburg report on Adani Group of companies, the common investors worried about the performance of their mutual funds, as quite a few fund houses have exposure to Adani stocks. Earlier, I have made a video on the topic of Hindenburg report and its effect on mutual fund investors. You can watch this video. Link is attached in the description and in the I button. So coming back to this video, we all know that Parag Parikh Flexicap Fund and Pgim India Flexicap Fund are the two top performing fund in its category, that is Flexicap category. Here we will be taking into consideration data of direct plans only. Firstly, let's look at the data of Parag Parikh Flexicap. To start with the AUM, that is total asset under management, which is more than 28,200 crores, which for a Flexicap fund is little on a higher side, whereas the expense ratio is 0.76%, which again is on a higher side as compared to other schemes in the category. The benchmark index, that is the reference against which the scheme is compared, is Nifty 500 TRI. Now let's look at the basic details for Pgim India Flexicap Fund. The AUM is more than 5,200 crores, whereas the expense ratio is 0.37%, which is quite low as compared to the other schemes in the category. The benchmark index is Nifty 500 TRI, which is same as that of Parag Parikh Flexicap Fund. Now let's look at the sector-wise allocation. Firstly, for Parag Parikh Flexicap Fund. From the table, it is very clear that the fund is heavily invested in finance, followed by service and technology. Now let's look for Pgim India Flexicap Fund. Again, here also, the fund is heavily invested in finance, followed by capital goods, automobile, technology, and consumer staples. And when compared to its category, both the fund's sector allocation is quite different from its category. Here, for both the funds, allocation in financial sector is on a higher side. And if these sectors do not perform well, which it has not done in 2022, it can drag the overall performance of the fund. Now let's also check the portfolio allocation. Firstly, for Parag Parikh Flexicap Fund. As evident, large cap shares form around 87% of the portfolio, whereas mid cap shares form other 11% of the portfolio, and only negligible 2.5% is allocated to small cap stocks. Its allocation is similar to that of a large cap fund. Flexicap Fund has the privilege of investing across categories without any capping, but as the fund's AUM increases, it becomes more and more difficult for the fund managers to find good stocks in the small and mid cap categories, and the fund's portfolio slowly turns like that of a large cap fund. Here, the portfolio is quite concentrated as there are only 38 stocks in the portfolio, and top 10 stocks and top 3 sectors form more than 56% of the portfolio. Now let's look at the portfolio allocation for Pgim India Flexicap Fund. As evident, large cap shares form around 60% of the portfolio, whereas mid cap shares form around 26% and around 13% is allocated to small cap stocks. Flexicap Funds has this privilege of investing across categories without any capping, and the fund is using it quite efficiently. The fund's portfolio is also quite diversified, as it is having around 44 stocks in its portfolio, with top 10 stocks contributing to 40% of the portfolio, whereas top 3 sectors contribute to around 48% of the portfolio. Here, if you compare, the Parag Parikh Flexicap Fund is having a concentrated portfolio with a turnover ratio of only 10.7%, which indicates that the fund follows a buy and hold strategy, whereas for Pgim India Flexicap Fund, the portfolio is little diversified with a turnover ratio of 144%, which indicates that the fund is dynamically changing its portfolio with the market conditions. The approach of both the funds are different, and we'll discuss this in the later part of the video. Now let's look at the top holdings. Firstly, let's look for Parag Parikh Flexicap Fund. As evident, HDFC, Bajaj Holdings, ICICI Bank, and Axis Bank are the main stocks of the financial sector, whereas overseas stock like Alphabet, that is Google, is the major contributor in the service sector. Microsoft and HCL form a major part of the technology sector. Here, one thing should be noted that the fund has exposure of around 74% in the Indian equity, whereas it has exposure of around 15.5% in foreign equity, and rest is in debt and cash. The allocation in foreign equity makes the fund unique from other Flexicap funds. Now let's look for Pgim India Flexicap Fund. As evident, HDFC Bank, ICICI Bank, HDFC Limited are the main stocks of the financial sector, whereas Cummins India and ISAB India are from the capital goods sector, whereas Reliance is from the energy sector. Here if you compare, then only HDFC Limited and ICICI Bank are the common stock in both the funds. Otherwise, there are no other common stocks between these two funds, which makes the overlapping quite low as both funds follow different investment policy. Now let's also look at the fund managers. Firstly, for Parag Parikh Flexicap Fund, Mr. Rajiv Thakkar for domestic portfolio and Mr. Ronak Onkar for foreign investment has been managing the fund since 2013. That is, from the inception of the scheme, whereas they have been joined by Mr. Raj Mehta in 2016 and Mr. Rukun Tarachand in May 2022. Here, this long-standing association of the fund manager with the same scheme is quite positive and an advantage for the scheme. Now let's look for Pgim India Flexicap Fund. Mr. Anirudh Naha has been managing the scheme from April 2018, that is almost 5 years, joined by Mr. Ananda in January 2021 and Mr. Bhupesh Kalyani in September 2022. Here also, the approach is little different as Parag Parikh is having fund managers since its inception, whereas for Pgim, the fund manager is only 5 years old. Now let's see how the fund performs on risk parameters. Here we compare the parameters with the benchmark index and the category average. Firstly, let's look for Parag Parikh Flexicap Fund. First one, mean return, that is the average return in a year, which is 22.23, which is more than both the category average and the benchmark. Here, higher the value is better. Second one, standard deviation, that is a tool to measure how much the return has deviated away from the mean return, which in this case is 19.69 and is also less than both the benchmark index and the category average. Here, lower the value is better. Third one, Sharpe ratio, that is a tool to measure the risk-adjusted return, which in this case is 0.94, which is more than both the benchmark index and the category average. Here, higher the value is better. Fourth one, beta, that is the volatility of the scheme compared to its benchmark, which is 0.77, which is less than the category average. Here, lower the value is better. Fifth one, alpha, that is a tool that measures how much better the fund has performed compared to the category. Here, it is 7.45, which is far more than the category average. Here, higher the value is better. Now let's see for Pgim India Flexicap Fund. Here also, almost all the risk parameters are good as compared to its category and the benchmark, except for the standard deviation and beta, which indicates that the fund is more volatile than its benchmark and category. But when compared to Parag Parikh Flexicap Fund, Pgim is not able to beat in any of the parameters except for the mean return, where the margin is also less than 1%. Hence, here I feel that Parag Parikh Flexicap Fund is a better performer. Now let's compare the trailing returns. Firstly, for Parag Parikh Flexicap Fund, on comparing the trailing returns for the entire period, it is able to beat its benchmark and the category except for the 1 year period, which is quite good and also necessary for the fund. Now let's compare for Pgim India Flexicap Fund. Here also, the fund is able to beat its category and benchmark for period 3 years and more, but not for period 1 year and less. And when compared to Parag Parikh Flexicap Fund, its performance is no way better. Here also, I feel the clear winner is Parag Parikh Flexicap Fund. Now let's also check the calendar returns. When checking the calendar returns for last 8 years, that is 2016 to 2022, both the funds have been quite inconsistent except for 2020 and 2021, where both the funds have outperformed its category and benchmark. Year 2022 had been really bad for both these funds. Hence, it can be concluded that both the funds are not consistent in its performance. Now let's also check the rolling returns. Here we'll check the rolling returns for 5 years, 3 years and 1 year and compare to its index. Firstly, let's see the 5-year rolling returns. From the graph, it is evident that both the funds have been able to beat its index 100%, but PGIM India Flexicap fund is having more volatility. Now let's see for 3 years rolling returns. Here also, the performance of Parag Parikh Flexicap fund is better as it beats its index 98%, whereas PGIM India beats its index 81% only. Now let's check 1-year rolling returns. Here also, the performance of Parag Parikh Flexicap fund is better than PGIM India Flexicap fund as both the funds are able to generate same average returns, but Parag Parikh Flexicap fund is having less volatility. Hence, from the rolling returns, it can be concluded that both the funds are having good returns, but performance of Parag Parikh Flexicap fund is slightly better than PGIM India Flexicap fund. Now let's also see the upside and downside capture ratios. Firstly, for Parag Parikh Flexicap fund, the upside capture ratio is the measure of how the fund performed relative to the index during the period when the index rose. Here, the value is 92, which indicates that the fund underperformed 8% than the index during the rise period. Here, higher the value is better and should generally be more than 100. The downside capture ratio is the measure of how the fund performed relative to the index during the period when the index has dropped. Here, the value is 65, which indicates that the fund declined only 65% as compared to the index during the fall period. Here, lower the value is better. Now let's see for PGIM India Flexicap fund. Here, the upside capture ratio is 109, which indicates that the fund outperformed 9% more when the index rose, whereas the downside capture ratio is 92, which indicates that the fund declined 92% as compared to the index during the fall period. Here, lower the value is better. When comparing for both the funds, Parag Parikh Flexicap fund is having a better downside protection ratio, whereas PGIM India Flexicap fund has a better upside capture ratio. Hence, we can say that both the funds are almost same. So now let's see what investors should do. But before suggesting what investors should do, I would request all of you that as you have watched the video till now, it seems that the topic is of your interest. Hence, I would request all of you to press the like button and also subscribe to my channel to watch such interesting videos in future. So coming back to the conclusion, what investors should do. Firstly, the existing investors. As both the funds' performance is good, I feel that if you are invested in any of the schemes, there is no need to worry and can continue your investment in the funds. Second, for the new investors. Here you can select between the funds depending on your objective and your asset allocation preference. If you are looking for a blend of Indian and foreign equity and feel that US markets will do good in coming times, then surely you can go with Parag Parikh Flexicap fund. For the investors who are not bullish on US markets and are looking for funds with only Indian equity but are comfortable with little more volatility, then can go with PGIM India Flexicap fund, as the fund's performance is also quite good. Here, I am not suggesting for Quant Flexicap fund, as quite a few people are skeptical about the volatility and the risk of the fund, and are also skeptical about the investing style of Quant Fund House. I would like to add that I have Parag Parikh Flexicap fund in my portfolio and will be continuing my investment in this fund. I will again try to review this fund separately after 6 to 7 months and check its performance. So stay tuned to my channel. Please subscribe to my channel if you are not done till now and also press the like button. Do check my older videos. Click the attached cards to watch these videos. Thank you.